Good afternoon and welcome to BizTech's Asian Midday Market Watch. Kelvin Wong, Senior Market Analyst from Oanda, is our guest today, the 14th of July. Kelvin, good afternoon.
Hey, good afternoon, Brian.
Now, Kelvin, right at where you're at, Singapore's GDP has come out and they've managed to avoid a technical recession. It grew by 0.7% in April to June period, expanding marginally from a 0.4% growth in the previous quarter. Now, what's your view on these numbers that have just come out?
Yeah, so if you look at on the surface, it seems to be a bit positive and optimistic. And yeah, 0.7 year-on-year Q2, slightly above expectation of 0.6%. But however, if you dive down deeper into the breakdown of the sectors that is driving Singapore growth for Q2, it's primarily in the services sector, which actually expanded quite well at 3% year-on-year versus 1.8% in Q1. But on the other hand, however, do not forget over here is that the significant contribution on the Singapore economy still comes from the external sector or external demand, to put it. That means very much linked to the global economy. And if you look at the situation over here is that one particular sector that's a high direct correlation with the global economy will be our manufacturing sector. So in fact, our manufacturing sector now is in recession, technical recession, because they actually strained for the second quarter. So for Q2, negative 7.5% versus negative 5.3% in Q1. So it's a kind of a deeper contraction of manufacturing growth. So given that the smaller size of the Singapore economy, I do not foresee that the service sector could continue to expand in Q3 at this rate. And what we could see over here is that the weakness, or might call it the more evidence of weakness, may start to trickle down in the later quarter in Q3 of this year for Singapore growth. So I do not believe that we are still out of the woods yet. And especially if you look at yesterday's China trade data up for the month of June. So Singapore and China, we are very close trading partners, and the trade interaction between these two countries has grown significantly in the last 3 to 5 years. And if you look at China imports numbers, they're actually down negative 6.3%. Okay, negative 6.3%, around negative 6.3% year-on-year for June. So if you look at it over here, is that it's actually below expectation of negative 4%. So it's deeper contraction. And it's also a 4-month consecutive decline of China imports. So if you look at the situation right now, definitely for sure is that unless China government starts to, or top policymakers starts to actually open the water tap to actually embark on more, we call it pronounced or more larger fiscal stimulus, which is the odds are rather low right now given their guidances in the last few weeks. They are actually more in favor of targeted fiscal measures to address their internal demand weakness over in China. I do not foresee that we could, we call it escape recession in the later part of this year.
Now, Calvin, I want to move over to the US now. We've got US bank earnings due out later tonight. What's your expectations of that?
Sure. So let's talk about first about the market expectation first on the bank's earnings. So if you look at this week itself, US stock market has a kind of a very positive performance, especially 2 days ago or on Wednesday, I would say, where we start to see headline and core CPI data coming cooler than expected. Yeah, even though that's CPI is a lagging indicator, but I think that's drive a bit of animal spirits in the market. So if you look at the situation right now is week to date, the banks are actually outperforming the benchmark indices. So let me give you some figures. So for the S&P week to date performance is at plus 2.5%. But if you look at the banks like JP Morgan, it's actually up plus 3%. Citibank is actually outperforming at plus 4%, and Wells Fargo is roughly around in line with the S&P at about 2.2%. So it seems to me that yeah, these three banks are actually reporting later tonight: JP Morgan, Citi, and Wells Fargo, right before a US market session open. So market expectation seems to be having in a kind of a rosy earnings outlook for Q2 results for these banks. But bear in mind over here is that do not forget, we also would like to see certain guidance coming out from the management of these banks, especially on their net interest margin. If you look at since the last release from Q1 until now, interest rates has been going up. So there's also a propensity for to actually kind of a prevent any what I call deposits outflow. They actually need to actually maintain a kind of a higher level of deposit rates to prevent depositors from leaving the bank. So that is something that investors and traders want to hear. Has this depositors flight has been negated, given that interest rates are still relatively high in the last couple of months. And going forward, Brahma over here is that if you look at GDP, we call it, yes, even though inflation numbers are actually down, but certain key economic indicators like manufacturing, ISM, US is still lackluster. Yeah, services still remaining strong. We have a slight temper off in the jobs numbers based on the number of added jobs actually grew lesser last month based on the NFP data last Friday as per se. We want to hear from banks that during the earnings during the earnings call during the Guardian session is that what is the propensity of having an increase in non-performing loan, especially on Citibank because they actually are kind of more of a commercial bank, and also how does their trading division perform, given the last few months there's a volatile, we call it volatile movement, especially in the fixed income market, where we start to see the bonds actually sold off in the last 2 weeks before recovering this week due to much more of a what I call cooler CPI data. So something very interesting to look out for, and because of the pricing by the expectation of market participants that they are seems to be looking forward to a much favorable earnings result based on the current week-to-date outperformance of these three banks, JPM, Citibank, and West of Ogo is more like on par with the S&P 500.
Now, on that note, Kelvin, thanks for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.